Hey everyone, this is Whitney Bonds, Program Ambassador for Mindset to Money, and I'm a member on the road to financial autonomy in 5 years or less, just like everyone else in the Mindset to Money community. Now, I'm so excited for today's video because I get to interview Dominique Brown about his upcoming masterclass in the Mindset to Money community on how to turn credit into cash. And this is going to be about accessing $100,000 in funding in just 90 days. Now, is that something you might be interested in? I think so. Dominique Brown is a personal finance expert and entrepreneur who has dedicated his life to helping people improve their financial health. He is the Chief Marketing Officer and founder of DisputePanda.com. He's the author of 2 books, How to Fix Your Credit and Olivia Learns Credit. And he's awesome, guys. He earns just a very small fortune, earning him multiple 6 figures per month. And this is across the portfolio of personal and business credit related companies. Dominique, it is so good to talk to you today. And we're going to get right into the questions. So can you first just give us a little bit, tell us a little bit about yourself and then how you first got exposed to the business funding space.
Thank you for having me. So I am Dominique Brown. I am the CMO of Dispute Panda, as well as some other fintech ventures that I can't talk about. But I got exposed to business funding out of necessity, right? So if you are building a software or you're starting a business, you have only a few ways to get funding. You can save up a bunch of money and just self-fund. You can go to friends and family members and borrow and possibly give them some equity, similar to like Shark Tank. Or you can leverage your personal credit, possibly some other business ventures to get other people's money, right? From banks, right? So what I did was, instead of liquidating all of my funds to build several of the businesses that we're in, I leveraged my personal credit. I started to leverage my business credit as my business is matured to get funding to fund the projects. So for me, it came down to, man, I did pretty well. I got a nice, strong savings. I have a great business idea, but I really just don't want to liquidate all of my money for this particular idea. So what occurred was, start getting into business funding out of necessity.
Okay, now that makes a lot of sense. So in your experience, what are some of the main reasons entrepreneurs apply for business loans? And are they thinking about business funding the right way?
In my experience, the main reason why entrepreneurs are applying for business loans, business fundings, and things like that, and thinking about getting it the right way, is because they don't want to use all their money. I mean, let's just use this scenario, right? You've worked all year and you saved 20 grand into your account and you have a great business idea. Do you think it makes 100% sense for you to liquidate or use all of that 100K, and now it leaves you vulnerable on the personal side? Or because your idea is a good idea and it's going to help people, does it make more sense to say, you know what, let me structure my company properly. Let me talk to these credit unions, talk to these banks, and see if they can offer me either a business line of credit or a revolving line of credit, so they are now my partner without equity. It always made sense to me that if I have a great vision and I know that it's going to help people, that I should use other people's money. Most people fail in business because of cash flow issues. If you know how to get business credit, if you know where to go, if you know how to structure your business properly, and you have a great product or service, business credit is going to be your silent partner that doesn't have any equity. So I think it's just smart to do. It's smart to plan that way. It's smart to structure your business properly so you don't have to dig in your own piggy bank to help your business out or to expand the vision or scale.
Yeah, now that makes a lot of sense. Okay. Now for startups with no money, are there alternative funding options outside of traditional business loans?
Yeah. For startups with no money, there's tons of ways to get funding, right? And we're going to talk about a lot of these ways in the masterclass and of course, the subsequent challenge. So you have your business line of credits, and they either can be low doc, no doc, or like full doc. So no documentation is when they just ask you, hey, tell me about your business, right? Low doc is tell me about your business, but I also want to see possibly a tax return or 3 months bank statements. Typically, it's like 3 months bank statements. And then like a full documentation thing is give me 2 years of tax returns, 3 months of bank statements, and it might be some interviews and some additional questions. And then you have your revolving credits, right? So this day and age, which is awesome, is a lot of banks and credit unions are fine with giving you up to 50 grand in revolving credit lines. And you can do this at multiple banks, right? So you can go to one bank and get 20 grand, another bank get 30 grand, another bank get 50 grand, as long as you know the proper sequencing, which credit bureaus they pull from, and how to structure your personal credit profile, then you should be fine doing that way. So those are your two ways of getting funding for a startup. You have your business line of credit, and then you have your revolving lines of credit. Of course, there's other ways that's not associated with you in general, like borrowing money, hard money loans, and things like that, giving up equity. But if you can keep as much equity as possible and fund yourself, you are in a great position.
Okay, now that's really good to know. All right, so what are the prerequisites for obtaining a startup business loan or other types of business funding?
Now, I know we just talked about business line of credit and a little bit of funding there, but there are some prerequisites for getting a loan, especially if you're a startup, right? And what I mean by a startup is you're limited, your company is less than 2 years old. You don't have tax returns, you don't have cash flow, you don't have history of being successful. So there's some prerequisites to getting your business line of credits or your revolving line of credits. And that typically leans on your personal credit profile, right? So the prerequisite will be you want to have a 680 plus or higher, right? You don't want to have more than 10 increase showing your credit profile in the last 2 years. Ideally 5. You don't want to have a high utilization. Ideally, you want to be between 1% and 6%. You want to have at least 5 accounts reporting. You don't want to have any late payments in the last 2 months, no collections, no charge-offs, no repossessions, no public records. That will be the prerequisite for somebody who doesn't have an already established business that's crushing it, that the bank can say, let me look at your business instead of you. Because in the beginning, you may have to be a personal guarantor for your business. So if your current business is less than 2 years old, no tax returns, not a lot of money in the bank, the only thing they can look at is you. So the prerequisite is you having your financial life in order, which I truly believe makes sense for when you're starting a business too, right? It's kind of like working out. You want to have a bit of discipline before you get those funds from somebody else, right? If you have poor financial habits and somebody drops 20 grand in your lap, are you going to be able to execute on that 20 grand properly? So the prerequisite would be having your personal financial house in order. And of course, this goes without saying, having a proper game plan for the funding. So I don't want you getting 20, 30, 40, 100 grand in funding and you have no way of how you're going to use this within your business. That's not a great idea, right? So getting funding is one thing, and then using the funding properly is the next.
No, yeah, that makes a lot of sense, and that's some really good advice. So what are some common types of startup business loans that are available for people like us?
Now, some common business loans or business funding options that are available. Once again, I think I talked about a little bit earlier. So you have your business line of credit, you have your revolving line of credit. Typically, if you are a startup, you're going to be in that revolving lane. There are a few places that will give you a business line of credit. So business line of credit essentially is like they'll just give you 10, 15, 20, 30 grand, and then you do what you want with it. Whereas revolving credit is like a credit card, right? You have to swipe the card to get the funds off the card. Or there's some other ways to get the funds off the card. But those generally are the two things that you're going to be doing or using.
Yeah, okay. Now, are there ways for entrepreneurs to predictably improve their personal credit score to enhance business funding eligibility?
Now, I know we talked about as a prerequisite you having your personal credit together, and there are some things that you can do to improve your credit, getting ready for funding. So one thing will be to, of course, if you have any negative derogatory items in your report, late payments, collections, charge-offs, public records, you need to work with a credit repair software to kind of get that done. I would highly recommend Dispute Panda and Credit Dino and using the AI to challenge those negative items. And as that's working through the system, gradually your score should improve, right? We're talking about guaranteed improvement, you have to do some improvement along with your repair, right? So from an improvement perspective, here's some things that you can do immediately. One, contact every single last creditor in which you're paying and set up an automatic bill payment. Why do I say that? Well, 35% of your score is paying your bills on time. If you pay your bills on time, then they're going to say you are paying. If you pay your bills on time, you have a massive impact on your credit score, right? It's 192.50 points. The second thing I will say is, well, let's look at our revolving credit, right? Let's look at our credit dyno report. Let's look at each credit card, each revolving card. Is it 6% of the limit and under, right? So if you have $1,000 limit, you need to pay it all the way down to $60. If you're above $60, you're too high, right? So if you think about it, your credit score is a byproduct of your financial behavior as well, right? So repair, we can use the software to do that. Improvement is going to take you doing it. The third thing that you can do once you're focused on your utilization, as you see, we just talk about paying our bills on time. We talk about paying down our utilization. Now let's talk about accelerating this. The third thing you can do is contact all your revolving cards and ask for a credit limit increase. The fourth thing that you can do is you can get 2 installment loans and 3 revolving credit lines or more. So now you have more things reporting on-time payments. You're lowering your utilization and doing all the things to properly show somebody, hey, I am good with finances, right? So as you start approaching that 680 and above, that's what you can do. Generally, it probably would take about 30 to 45 days, right? If you get a credit card today, it takes 45 days to report. So you're not going to see the impact of what I just specified to do for about 45 days or so. But by doing all of that at once, your score should drastically improve. That's not even counting if you get something deleted off negative off your credit report. And I'm talking about what you can actually do to guarantee your score goes up is on the improvement side. The repair side gets rid of some of that negative old history.
This is all so helpful. So can you tell us what we're going to be talking about in the upcoming masterclass?
All right, so let's talk about what I'm going to cover in this masterclass. So I'm going to cover number one, what is needed from a prerequisite position to get fundable from the business and the personal side, because there's 2 different things you need to do before you go for funding on the business side and the personal side. Then number 2, we're going to talk about our sequence of funding, which credit unions, which big banks, and possibly some alternative funding sources as well that we're going for. Then we're going to talk about applying for the funding. Okay, how do we apply for funding? Some things are in person, some things are online, but which way do we specifically do that for success? And then we're going to talk about possibly how do we, once we get the funding, once we receive our funding in our business name, what do we do to get the funding from, say, the revolving cards to be able to deploy within our business and so on and so forth. I think those 4 things is all you need to be able to get the funding you need to win within your business. Of course, we're going to talk about a little bit earlier why you should get funding, the importance of funding, why it matters. I mean, most of the largest companies that we know in the world started with some form of funding, whether it was a loan from a person they love or a loan from a bank. All of these companies that we know, love, and trust that we use every day started with some form of funding. So it would only be right for you to have funding to scale and expedite your vision so everyone can win. See you in the masterclass.
All right. Thank you so much, Dominique, for spending time with me today. Now, for all of you guys watching right now, this is definitely a masterclass that you do not want to miss. Check out the instructions on the page to register. And as always, thank you for watching, guys, and I'll see you there. Have a great one.